Well, Tyler, you know the importance of the consumer to the U.S. economy. About 70% of GDP is driven by consumer spending. So the Conference Board Consumer Confidence Index is incredibly important. We're sitting here at near all-time highs, and it's been growing pretty steady over the past 6 months and the past year. So the consumer sees no end in sight to this GDP situation. That's great because there has been a gap with CEO confidence, driven by the trade skirmishes and some of the other things, but the consumer has remained strong. Now, the question is, where is it going to go? The consumer confidence is tied more to jobs. So individuals look at their own situation, they look at their wages, they look at how confident they are in keeping their jobs, and as long as that keeps humming away, the consumer confidence should remain high and consumer spending should remain high.
And the ADP report on jobs earlier this week, very positive. We'll get a full number from the Labor Department tomorrow. Who knows what we'll see there, but the jobs growth has been really steady and strong. Let's talk about differences in age groups. Are older respondents more or less confident than younger respondents, and how has that been trending?
Well, it's interesting because the older respondents, 55 and older, typically are more cynical, a little bit less confident than the younger. I think when you get a little gray hair, Tyler, it just makes you crabby.
I'm more cynical.
But the younger group is more confident. But it does tie to economic factors because we saw coming out of the Great Recession that the younger group got right back into it and started spending, was more confident. But remember, they are not as heavily invested in assets. They don't have as many homes that they own, and so they didn't take as big of a hit. And so they came out of it faster. Now we've seen that gap close, and for the first time in a long time, you see no difference between the older generation and the younger generation. So there are differences that float over time, but look, if Goldilocks was calling this one, she would be very happy with where we are with this economy.
But what you said, Steve, I think is significant, that the younger generation isn't as optimistic, relatively speaking, as it used to be. We know the reasons why. I mean, there's high student debt. They're not homeowners to the same extent. There's not a lot of family formation. It seems to sort of reflect a broader problem, doesn't it? Even though the economy is growing and everything's kind of ticking along in that sense.
Well, Kelly, that floats a little bit. It's a little more volatile with the younger generation. So you see them, during graduation times when they're coming out and they're getting jobs. All of a sudden you see a spike at various points. It ebbs and flows. But we do see pretty record highs here for people of, both extremes in the generations, which is unusual going into a great fiscal year like this. So our projection at the Conference Board is that we ought to see GDP growth in the low 2% range, and it ought to remain fairly steady. Global growth is still very strong. There are some soft points, and there are unknowns like Brexit. There are unknowns like the coronavirus. There are unknowns like the election, which could have a big impact on what happens with the financial assets, because if there are material policy changes in taxes or regulation that hit it, then you could see consumer confidence in the older group go down. So all of these are variables which we ought to see play out in 2020. Should be a really interesting year.
You look, very quickly, you look at different age groups. Do you look at different racial or ethnic groups, and are there differences that are telling?
We see differences in demographic groups. Over time, people with more money invested in the market, and hence the wealthier groups tend to be a little bit more confident as their assets do better and vice versa. But this job market has favored blue-collar workers and lower-income workers. So you've seen that gap close during this period of time, too. It's really an extraordinary period where, everything is converging for people of all ages and income groups.
Very interesting. Steve Odland of the Conference Board, thank you very much.